party started. So welcome everyone to Market Insights. This is Landmark Title's monthly market stats update. And whoa, what a month it's been. What a year it's been. And we are not stopping anytime soon in our market. I'm joined today by Vice ARMLS Chair Scott Kiburz. Scott, I'm gonna hand the baton over to you and let's take it away.
Fantastic. Are we at the fast facts number 1 slide?
Oh, I don't know that I have a fast facts today.
Okay, all right. So I have a summary of that, ladies and gentlemen. Welcome everybody that's listening in today. We opened this morning today in the Arizona Regional MLS for Maricopa County. Just please know from a facts standpoint, we have 3,635 active listings in Maricopa County. We have 6,495 solds in the last 30 days. And we have 9,875, just under 10,000 homes under contract today. So the market, we're still closing a lot of business. Title, escrow, lending, home inspectors, everybody's working very hard in spite of the incredibly low inventory. I'm going to give just some more texture for the group, and I'm sorry I don't have a slide on this, but this is important to know. So 45 minutes ago, we had 3,741 active or total listings in Maricopa County, but that equals 2,587 single family, that equals 52 patio homes, that equals 288 townhomes, 477 condos, and 281 manufactured homes equals 3,741, give or take the last handful of slides or handful of homes. Under contract in CCB, we got 3,850. Coming soon, we have more than 10% of our market. We have closer to 15% of our market. 569 homes are coming soon. So if you're a buyer agent or looking for comps or trying to find that home somewhere hidden, make sure you're checking out coming soon. Pending, we have 5,915 closed. Since January 1, we've got 6,913 homes. So everybody's working hard. I salute you, and I salute you especially because there's such a low inventory. This first slide here is from HUD, and this is just a for what it's worth knowledge piece. They approved $2.5 billion last week for homeless initiatives. Well, what does that mean in Arizona? I carved this out. We have 76 initiatives, and we're receiving $46 million of funding from HUD to help our homeless population. So that's news you should use and look for ways for that to be used throughout the community. Sarah, if you would for me, the next slide. Realtor.com announced on January 4th the top housing markets in the US, and they got real granular from Akron, Ohio, and Albany and Albuquerque. And I cut the next slide, Sarah, and I just highlighted over Phoenix. So Phoenix is number 6 in the nation, and they're looking at a combined appreciation between sales and prices to be at 18.4%. That's number 6 in the nation. And then on this specific piece I cut, I wanted to point out, like New York technically is trending down. Northport, Sarasota, and Florida, that is up there pretty competitive. That's over 17 or 17.9%. Oxnard, California is up there at, that would be 17, 18%. So Oxnard, Southern California, and us are probably 7, 8, 9, give or take. Just news you can use is spite of the low inventory, in spite of the appreciation in home values we've had in the last 12 months, look for this to just be higher by this time in 2022. That's the trend we're going to watch. Sarah? This is just some quick insight for everybody. So as we went into the end of the month, I carved this out just because I'm trying to watch the trend so tight. So I was shocked at 4,216 active listings on the 31st. Sarah? Then you kick off, and the very next day we were down to 4,013. I thought, oh my, if we ever get below 5,000, it's mission critical. Never imagined that we would get below 4,000. Sarah?
And we're stuck there, right?
Nope. We're not. Keep going. We're at 3,773. This morning we were at 3,635. So when you only have 4 to 5,000 homes available, and you go down by 400, that's a huge percent down. Our normal market, our marketplace, we traditionally have somewhere between 26 and 28,000 active listings. For 5 million people, we can handle that all day long. Uh, Ladies and gentlemen out there that are closing business, if you've got under 4,000 active listings, I salute you, because that is relationship, that is skill and knowledge and leverage, and being at the right place at the right time. I know these don't come easy right now. Sarah? A couple things that are worth noting here. So our absorption rate for the beginning of February, we landed at 148% absorption rate. That is staggering, well over 100%. So from there, if we'll go to the next slide, Sarah, we're looking at what I want everybody to see on today's message is that this trend is just going up, and it's going up at a much fierce pace. The average price point continues to accelerate, and the median continues to accelerate. Look for this in the next 90 days to just go even higher, please. Next slide, please. So I did a couple things here for Maricopa County for the group, and I tried to get a lot of information on one page. So the top 1/3 of this graph shows by prices, 0 to 100,000, 100 to 2, 2 to 3, 3 to 5, etc. That just shows the current number of homes when this report was completed, of how many homes are in that price point. So if you're working with a buyer, it's an easy way to look at it and say, gosh, I have a buyer between 2 and 300,000. Well, in all of Maricopa County, there's only 516 homes available on that day. And you say, well, what was it like a year ago? If you slide over to 365, we had 1769 homes. We had 3 times that inventory just a year ago. It's off 70% from where it was a year ago. That's what that slide is designed to do for you. So when you're setting expectation for your buyers and your sellers, just this is what's happening at the market. And it's an easy way to look at how competitive it is for your buyers, and how much leverage the seller has if they really want to be. Now, it's great if you're a seller and you don't have to buy. But if you're a seller who then is turning around and getting into the buying aspect of things, as I turn to move into the buy zone, boy, it's competitive. The middle 1/3 of the graph is active listings. And what this is doing is it just showing a pie graph illustrated versus just a numeric of how big those markets are. And the point of this what I like to point out visually, is when you look at the on the right graph, the 365 a year ago active listing breakdown, when you look between 2 and 500,000, the red and the yellow, you're looking basically at essentially 50% of our market. Well, when you go to the current active listing breakdown, the red and the yellow, it's currently 30, 40%. It's down by about 10%. And that 10% didn't just jump up to the next price point. It left that price point too. And it left in blue, it left the $7 to $1 million. It moved all the way up into $1 million plus to deviate that 10%. So our prices have really, really surged. And then the last piece here, the bottom 1/3 of this graph, is illustrating the percent of growth up and down. And just know that when you look at the very last line, 3 million and above, what it's looking at, the prices have gone up 6% compared to where it was. Well, let me say it a different way. It's gone up 90% from where it was a year ago. If you look in the bottom right to today, it's up 90%. It's just surging.
That's crazy. I feel like I spend so much of this just like shaking my head in disbelief.
So I won't be as detailed on the rest of these, but I wanted to take a deep dive in Maricopa County. So now when you're looking at actives, now we're looking at under contract, and it's the same concept slide. It's what happens under contract, and the same thing would apply. In the pie graph in the middle, in black and orange, 34 and 36%. Of course, ladies and gentlemen, that's 70% of our market price point was in that location. And today it's 60, let's see, 60, 64, so it's down 6% under contract. And the next slide, Sarah. This is sold. This is a sold breakdown. So I'm staying right in the pie graph, and ladies and gentlemen in the group, you can look up and look down. But on the right, 27 and 43, the black and the orange, between $200,000 and $500,000. That was a majority of our market. That was the buy box for any of the iBuyers. That was their sweet spot. That's what they went after to get, is under $500,000. Well, ladies and gentlemen, that is now 66%, not north of 70%. And our market is surging, and this is the validating differential on that. Sarah, next slide, please. Okay, ladies and gentlemen, current active listings. So what I'd like you to just take away from this, ladies and gentlemen, 3 key things. Number one, just look at the green listing count bars, and you're just seeing our inventory go from just under 16,000 in February of 2019 to currently under 4,000 today. That's a great visual, ladies and gentlemen. If you're talking to a buyer or a seller, that's the market of the moment. And the overlay of the black and gold lines for the median average sale price, prices are going up, just a great surge. But note also that from February of 19 till about July of 2020, those lines were almost a mirror image in terms of the gap. But if you look in the last 90, 120 days, that gap is spreading. And so our average sale price is definitely surging. And then if you look at the bottom of this graph, you're going to look at the real simply, you're going to say, okay, under the metric and current, you're looking at the number of listings, 377 or 3773. You're looking at the average sale price at 290 and the median sale price at 237. And if you slide all the way back to the right, you can say we're up 26% from a year ago in the average dollar per square foot, and we're up 22% the last 12 months for the median sale price. That, ladies and gentlemen, is amazing. Great time to be a homeowner. Sarah, next slide, please. That, by the way, that was the under contract. So now this is the under contract. This just blows my mind. Look at the low number in December of 19, the green bar that's barely alive. That's still north of 6,000. That was a very slow month for our marketplace. So even though we have a very small number of listings under 4,000, ladies and gentlemen, since December, January, and February, we're closing over 9,000 listings in January, and we're targeted with under contract over 9,000 and just under 10,000 right now in February. And so everything is surging. Sarah?
There we go.
Sales volume. So I ran this right on the beginning of the month. So February is really non-existent yet. And that's why that arc comes down just a little bit with the trend in the gold colored document, gold colored line. Dollars per square foot were up significantly. Okay, move my little cursor here. So from a year ago, we're up 18% across the board on sold listings. We're currently under contract in the 20s, but we're sold at 18. Again, highlighting the Realtor.com document that came out in January. They're expecting a repeat of that 18% this time next year. The market's on fire. Sarah? And then I put some gaps in here just to change thoughts for everybody. So the next slide. Okay, so here, current listings, Maricopa County. This is just what is happening as a summary. This is active in Maricopa County. So ladies and gentlemen, I put the green arrows where I wanted you to place your focus. So the 5 green arrows, 4 green arrows. Boom, 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 current actives, the average sale price, and this is all of Maricopa County. I wanted to highlight this is all Maricopa County, not Pinell, not Utah or Mexico or anyplace else. Please, Sarah. And then the next, there's 3 slides coming up here. Go ahead. So I wanted to show some extremisms, get granular at just a little bit different level. So this is the town of Paradise Valley, 85253. And what I wanted to share, ladies and gentlemen, so when you look at that arc of prices, the black and gold line, how it's going up north of $600. So go to the green arrow at the bottom, average dollar per square foot and median dollar per square foot. 602 for the median, the average 629 for all of Paradise Valley, up 29% for the average and up 36% for the median. Ladies and gentlemen, that is where the growth is in terms of a percent of home buyers. A year ago, 488 and 442 was the median and the average sale price. That is a significant surge. Next, please. And so you're saying, okay, well, that's significant for the active, but what's happened in the under contract? Well, under contract is up 13 and 24% from a year ago. It's at 492 and 453. So that's basically, if you look at, let's do this for the group, ladies and gentlemen, just to get granular. On the bottom graph where it says metric and days ago, just go back 90 days. The average and median sale price 90 days ago, 462 and 430. And we're now at 492 and 453, $20, $30, $40 per square foot rise in just 90 days. That is a 6 and a 5% rise at a very high price point. Significant numbers. Sarah? And then sold dollars, they're up 10 and 5% from a year ago this time. Going back the prior year, we were at 411. Today we're at 455 average. A year ago, we were at 408 median, and we're at 430. So the gap essentially is this. In Paradise Valley, the actives and under contract are up about $50 a square foot in 90 days. And yet in the last, this time a year ago, we're up about $20 to $30 a square foot. Look for those prices to land in a sold price point and bring this whole average up for this town of Paradise Valley. Sarah? Okay, one new graph from ARMLS. I just wanted to give just some texture on this. New residential listings. I just wanted to show the trend as we've marched along since January of 18. And I like the fact that it's numeric and you can look at these points on the graph, but traditionally look at December of 18 at 5,239 and December of 19, 4,734, and then look at December 5,722. Those are traditionally the three low points that you look in a historic view. A lot of people prefer not to list and have the energy around listing and selling a home at that time. But the number of homes that we've closed, even though there's been fewer listings, is just crazy fast. Sarah, next. Okay, so I have three slides per Maricopa County, 3 slides to Phoenix. And then from there, Sarah, like before, I've got approximately 18 cities from Apache Junction to Tolleson that have 2 slides just talking about what's happening. So I talk in terms of the blue, green, yellow, red, and purple infographic. So just in a nutshell, this is a great graph to show any kind of buyer or seller and explain it very quickly. Active listings are down in blue, 57.8% for all Maricopa County. And if you follow the white line across to active listings at 3,994 on this day, and you can quickly look back to January of 2020, we had 9,456. And it's just a great way to illustrate trends to agents. It's a great way to illustrate trends to buyers and sellers. Sold listings are up by 9.4%, median sale price is up 18% across Maricopa County, all things considered. What's super ironic is this is the forecast that Realtor.com is giving Maricopa County for 2021 as well. Now, while our actives are down, our solds are up by almost 10%. Our supply is down by 61% in the orange, and days on market just 32. Going back to the orange, month of supply down 61%. We have less than a month of supply available to us. In fact, it's not quite 3 weeks at this rate. So we had 1.7 months of supply a year ago this time.
Yeah, I was gonna say, Scott, do you remember when we had almost 2 months of supply? Seems like a decade ago.
And when you put the low inventory we have today, 2 months of supply is an easy market to do business in compared to this. So.
I know, and we were complaining about that.
Exactly. Sarah, so what we have here is just a quick summary. And I love this graph very much. It just tells me everything I need to know in one slide. So our active listings at 3,994, and it's just showing below that, the arrow's pointing down, it's showing how many fewer that we had a month ago, 3 months ago, 6 months ago, and a year ago. Under contract, 9,458, and it's showing we're up 21% from the prior month. Sold listings, 6,011, and it's showing how much we were down. And then new listings, 7,406, average days on market 45. Then also in the pie graph in the middle, it's just showing that our market traditionally is very normal, that we're at 84% of our homes are just a normal traditional sale. The green for all of Maricopa County, 8.37 are flips. So that's still the market of the moment. The unknown and other are going to be non-MLS, any kind of foreclosure or anything like that is going to show up. It normally has to have at least 3% to even show up on this graph. So we're in a very normal market from that standpoint. At the bottom, month supply, sold to list price, what it's showing there just for the month of January of 2021, MOS stands for month of supply, 2.52 for homes between 0 and 100,000. And in this point, a lot of times that's land or lots. Then 1 to 2, 2 to 3, 3 to 5, etc. What it's showing is month of supply and sell to list price. So when you get to 200 to 300,000 and you get to sell to list, right now everything is over. 100% of it is on average over asking. When you get to 3 to 5, same thing. When you get back up to over 500 to 700, you're still at 99.5 sell to list price. And so this graph here is phenomenal. Just give me an update of what's happening. And ladies and gentlemen that are paying attention right now, if you go back up to sold listings at 6019 or 6011, and you slide over to the next line down, new listings, 7,406. At that point, you can look and say, well, if the trend continues, we're stacking just over 1,390 new listings more we sold last month. But we have 9,458 under contract. We're going to continue to burn off that active listing inventory at this rate. Next slide, please. So then I added for all of Maricopa County, again, same graph, same insight, just for rentals. And I just wanted to point out to everybody paying attention and listening, and I thank you all. But in the yellow gold dial infographic, median sale price is up 12.4% across the board for all of Maricopa County at $1.18 a square foot. So 1,000 square foot something is going to, across all of Maricopa County combined, is $1.18 a square foot from an average rental price. So please know, just that graph can be run for any city and any zip code. If you're working with investors or anybody who's looking to buy investment properties and have them rented, that's an easy graph to get granular by the zip code for your clients. Next slide, please, Sarah. So I did the same thing here for Phoenix. So same graphic. And what I wanted to point out is our actives are down by 53% in the blue. We had 1,000 doors. We have 1,010 doors in all of Maricopa County. That is single family, townhome, condo, patio home, manufactured home. We have 1.6, 1.8 million population and only 1,000 homes that are technically active for that community. And all of Phoenix combined in yellow is up 18% from a year ago. So anybody that you helped in the last 12 to 36 months, they got to be happy that you were their agent. Sarah? What we have here for all of Phoenix, same graph here. It gets a little bit more granular, and it's just telling us that our actives are at 1,010. Under contract is more than double, 2,442. Our solds are at 1,638, and our new listings are coming in a little bit faster at 1,945, and that is up from where we were a month ago by 22%. I'd love to show you again, for the people watching, the trends for the next 6 to 12 months. In the black part of the graph, that 81% of our home sales are normal. There's a lot of talk about the forbearance and things like that. There's a lot of people that are studying hard for learning how to do foreclosures and trying to get prepared for that. And then I have another group of people saying, hey, it's not going to be as big as you think. There's a lot going on with lenders and how they're going to be able to help those people stay in those homes. That's a whole different class, but just know that there's a group of people out there saying there's going to be a lot of foreclosures. And there's another group out there saying, probably not going to be as much as you anticipate. Sarah, I think we're almost done with the key things. Here's rentals for Phoenix. They're down by 17%. They're up by just under 10. And then the next couple slides, Sarah, I'll just introduce that. And if there's a question or anything that somebody wants to put in the chat box, this will be the time. So the rest of the slides, ladies and gentlemen, and Sarah does a great job of sending this out, is we have 2 slides per city. So we've got an overview of Avondale, and we've got what's happening at the granular level in a numeric standpoint. So if you like numbers, that's your graph. If you like infographics, that's your graph. And that goes from all the major cities alphabetized all the way out to Tolleson. I believe there's 18, 19, 20 cities that are in this graph. Sarah, just in case there's anybody that's got a question, now's the time to throw it in the chat box. But that is my market insights for the month of February 2021.
Awesome, Scott. Yes, if anybody does have any questions, I know all y'all's minds are probably blown right now with this information. I think in this industry, we wake up every day and go, is this real? Is this really what we're doing? And yes, everybody will get a copy of these slides. We do record this as well. So we will send out a copy of the slides and the recording. And if you have any questions, please reach out to us at Landmark Title. Scott Kiburz, ARMLS Vice Chair, love this information. It keeps us up to date. It gets us well equipped to go out there and, deal with our clients and understand the market and understand the questions that they may have. So if there's no other questions, Scott.
We can sign off for today. Sarah, you guys do a great job at Landmark. I appreciate you. And it's through education, ladies and gentlemen, that we can navigate this low inventory, provide success for buyers and sellers. So leverage your affiliate partners, leverage your title, escrow, lender partners, inspectors, everybody. It needs a full team to get close in this market at the moment.
It really does. And we, we hear, especially the way this market is right now, so many of these deals, you're scrambling to get them, you're trying to get them in, and then something goes sideways, whether it's on the title side, whether it's on the lending side. You don't want to get into a situation where there's an issue. And that's why right now your industry partners are more important than ever, because you need a team behind you that is going to get the job done for your clients. Because if the job doesn't get done for your clients, you might not get a second shot right now. I mean, it's got to happen. It's got to happen in this market. So please think of us for all of your title, escrow, and marketing needs. We've got an amazing team at Landmark Title here to serve you. On our business development manager side, we've got Becky, Beth, Melinda, Mary, Zach, Patty, and Michael. These are the people on the ground. They're the ones that are going to be your accountability partners. They're going to help inspire you. They're going to help you to stand out in this market. And then, as always, please think of Landmark Title on your next contract. We'd love to partner with you. We are all over the Valley, 6 offices. So wherever you are in the Valley, there is a Landmark Title office to serve you. And Scott, thank you once again. My mind is continued to be blown every single month when we do these. Where are we going from here?
Well, stay tuned. It's going to evolve very quickly. Sarah, good to see you as always. Thanks everybody for being on. Cheers to the day out there.
Thank you, Scott. You have a wonderful week.
Thank you. Bye now.